There are big things happening globally that are going to have a direct effect on your portfolio. One sector in particular is under fire and it's only going to get worse. And this is a sector of stocks that has made so many of us so much money. So there's a ton of opportunity here, but it's getting more and more risky by the day. So we got to keep our eyes on the exit. I'm currently invested in this sector too, and so are all of our Fallible members who use our strategy. So from here on out, for these stocks, it's really going to be a timing and risk control game. So in this video, we're going to talk about what exactly is happening and how to play it. And we're going to get into which stocks you should sell immediately and which stocks you could actually buy for a shorter term play. Now, the sector that I'm talking about is none other than Chinese stocks. And yes, that includes NIO, YouTube's second favorite stock behind Tesla. But these Chinese stocks are lining up to get slaughtered, and I'm going to explain why. There's a few things you got to understand though before we get into it. First is the CCP, the Chinese Communist Party. So the government that rules China. You got to understand that the way they rule China is with an iron fist. And it all starts with this guy right here, Xi Jinping. He's basically the emperor of China. He's made himself one over the last few years. He's gotten rid of all his political rivals and now he's sitting at the top and he's not going anywhere. Like I said, emperor. And he doesn't want to just stop at ruling China either. He basically wants to rule the entire world. And I'm not even kidding here. We started talking about China and covering it a few years ago. And people would say, oh, AK, you're just a racist conspiracy theory nut. But nowadays, as these stories are becoming more headline news, people are like, oh yeah, it actually is happening. And just to make a clarification here, there's nothing wrong with Chinese people. They are actually victims of their own government, the CCP. So the CCP are the bad guys, as we'll explain in this video. And of course, Xi Jinping, the leader of the CCP. They are the ones that are screwing everything up. And when it comes to evaluating the CCP and judging what they're doing, you can't judge them based off your own values. Then you're going to misjudge them. You're going to completely underestimate what they're capable of. Nothing is too crazy when it comes to the CCP. My rule is that whatever I learn and understand, I expect it's just much worse. So like I was saying, CCP runs China with an iron fist. So based off that, you got to understand that every single Chinese company is also controlled by the government, the CCP. If they're controlling citizens down to their very thoughts, then of course they're controlling every aspect of these businesses. Well, I shouldn't say every aspect, but all the important stuff. Recently, they've become even more outspoken about it. Here's Xi Jinping right here. China's Xi ramps up control of private sector. This is from the Wall Street Journal, obviously. It says Xi Jinping, long distrustful of the private sector, is moving assertively to bring it to heel. So you got to understand what this guy did. Like I said, he got rid of all his political opponents, right? So he became the emperor of China. And now to stay emperor, you got to make sure that no one else is getting too powerful. That includes businesses in your country. So lately, he's been tightening his grip around Chinese businesses, which is why this sector is in so much trouble, but I'll keep explaining here. So the government is installing more Communist Party officials inside private firms. They're starving them of credit and demanding executives tailor their businesses to achieve state goals. Like I said, every company ends up working for the CCP and what they want. So the push is driven by a deepening conviction within the country's leadership that markets and private entrepreneurs, while important to China's rise, are unpredictable and not to be fully trusted. You could read that as they're getting too powerful and they need to be reined in, because no one can be more powerful than the CCP, especially the emperor. No one needs to come close to him. In September, the party issued new guidelines for private companies, reminding them to serve the state and vowing to use education and other tools to continuously enhance the political consensus of private business people under the leadership of the party. This is scary right here, vowing to use education to force these business leaders to serve the party. And you'll see in a second, when they talk about education, they mean kidnapping you and forcing you to sit in a concentration camp. But you'll see. So you probably heard the criticism against companies like TikTok or Zoom, which are both companies that have at least some of their operations based in China. And the issue with that is that the CCP has access to all their data. Regardless of what they say, the CCP gets all that information. And that, of course, poses a national security risk to the US, because they're always doing something devious. You've also heard of all the technology that they've stolen over the years. They do that by stealing data, and they don't care. It doesn't matter to them. And there's other terrible things that they do with the data too. For example, Alibaba was being used to track Muslims in China. And yes, Alibaba is one of the stocks you will definitely want to get rid of, and we'll talk about that more in a second. So one thing to understand real quick is that the CCP hates Muslims in China. They want to get rid of them. They don't want any Muslim culture in China. But the thing is that it is a big group of people. And regardless of how big it is, you can't wipe out a culture, and you can't persecute people based off their religion. So the big Muslim group that they're targeting are called Uyghurs, which are Chinese Muslims. And you can see this New York Times article explains it. The Chinese government has swept hundreds of thousands of Uyghurs and others into indoctrination camps. These are what the CCP calls those re-education camps that I was talking about. Re-education. And they call it an anti-terrorism campaign. It's also rolled out a broad surveillance dragnet using facial recognition and genetic testing to monitor these people. The United States government, among others, have denounced the program and penalize Chinese companies that are believed to be involved. And here's the thing, Alibaba is involved. So their website for its cloud computing business showed how clients could use its software to detect the faces of Uyghurs and other ethnic minorities within images and videos. So here's what happens in China if you're a Uyghur. If you're not already in one of their concentration camps, they have cameras all outside of your house and they track where you go, what you do, and what you say. And then they score you on a point system. And if you go out of line, then you get picked up and disappeared to one of these concentration camps. And this is all real stuff. I'm not making this up. This is becoming mainstream news now. So you can see Alibaba's technology and their website was used to help do some of that stuff. And is it Alibaba's fault? It doesn't matter because the CCP controls it at the end of the day. And you can see here, they even do genetic testing. And one of the worst stories to come from this is once they have all these people in these camps, they're able to harvest their organs because they have all their genetic tests. So if someone needs a kidney, they'll take it from one of the people here. It's disgusting. And the only reason I first heard about this a few years ago is because one of my best friends is a Uyghur living in the US. And he had family members back in China getting stuck in these camps. It was crazy. I couldn't even believe it. So I'm glad when this stuff is becoming more mainstream so more people know about it. But of course, this is going to affect our investments. Alibaba in particular has been going at it with the CCP, specifically their CEO, Jack Ma, who's basically like a rock star, a global one. But what did I tell you? No one can be more powerful than the CCP. And if you start getting up there, they are going to knock you down. And that's exactly what they're doing to Alibaba and Jack Ma right now. They're seeking to shrink Jack Ma's technology and financial empire and potentially take a larger stake in his businesses. Their restructuring roadmap that they put together is forcing Ant Group, which is part of Baba, or it's spinning off. They're forcing it to return to its roots as an online payment provider like PayPal, while its more profitable investment and loan business would be curtailed. So they're basically breaking this whole company up. And it's no question that the purpose is to rein in Jack Ma. That's the goal here because he's become too big. And he's just such a big part of the huge boom in China because Ant and Alibaba together have allowed hundreds of millions of Chinese consumers and businesses to make a purchase, deposit money, execute an investment, or take out a loan with a swipe of the thumb. And by the way, Ant Group is basically like the financial arm of Alibaba, still run by Jack Ma. But Jack Ma just started talking too much when he became too big. He's flashy and outspoken and has long clashed with regulators. And in late October, Jack Ma got cheeky enough to openly criticize Xi Jinping and his signature risk control initiative. And he also slammed regulators for stifling innovation. He made that speech right before Ant was supposed to have its IPO. And because he called out the emperor went and called off the IPO, which was expected to be the biggest ever and value Ant at more than $300 billion. And now the whole government is looking into Mr. Ma's empire. And that's just big trouble for that company. The thing is, if you're a Chinese citizen like Jack Ma, you never ever speak against the party. Because if you do, you'll wind up disappearing. There's lots of stories of this, of people showing dissent and they just disappear. You don't find them again. Their families never find them again. Are they dead? Probably. Or hidden underground somewhere. And this is just a day in the life of CCP. So based on everything I've said so far, you could see why it's not a good idea to do business in China as long as the CCP is in power. And I'm saying that from a moral and risk standpoint. But no one cares about those things because people only care about money. That's the truth. And that's why every US company wants to be over there. Every hedge fund manager says they want to invest over there because there's so much money. Like Disney, they make a ton of money off of China. They filmed that live action Mulan right next to the concentration camps. They even thanked the security guards afterwards. People were so mad, but Disney doesn't care because they are going to suck up to the CCP because so much money comes from that. LeBron James loves the CCP. He will praise them to the moon and back because he makes so much money. Even us as investors, we're all investing in Chinese stocks. So if that's the case and all of us are terrible capitalistic people, which we are as Americans, what is the solution? Well, the solution is government intervention. They need to come in and set the rules of the game. And one of those rules needs to be no dealing with China. That's the thing about capitalism. It needs rules or it eats itself alive. And the government is supposed to come in and set those rules. This is where government intervention is good. So make any China move illegal and then all these companies will be forced not to deal with them. And there's no pressure for your business to be in that market because again, those companies are competing against all the other companies. It's just our capitalistic system. So one company can't say, oh no, morally I don't want to deal with China because then they're going to make less money than their competitor and then that CEO or whatever will get fired. So again, it's a game that everyone's playing. The government needs to just come in and set the rules. And that's what's starting to happen. Trump recently signed a bill that could delist Chinese companies from the US stock exchanges. And I've been waiting for this to happen for a long time. It's called the Holding Foreign Companies Companies Accountable Act, and it's going to require companies to establish that they are not owned or controlled by a foreign government and allow the U.S. Public Accounting Oversight Board to review their financial audits. Not owned or controlled by a foreign government. You can see this is a direct hit against China. So now that this thing is signed, these companies have a grace period of 3 years to comply with this requirement before facing the threat of losing access to U.S. stock markets, which is a key source of capital for these companies, as you can tell with the way that NEO shot off. And like I said, we're all invested in these Chinese companies. We can make a lot of money from them. And what's nice is that this thing passed in the House by unanimous vote. It was a unanimous vote in the Senate too. So the government is starting to take a hard line against China, getting support on both sides because there's a lot of tension that is building up between our two countries. Hate or love Trump, his hard stance against China is a good move. And I hope the next administration will continue that. And based off the bipartisan support for this stuff, it looks like they might. So these Chinese companies that we made so much money off of, they might get delisted and we can't trade them anymore, which I would be very happy about because I think China needs to be isolated from the rest of the world until they stop what they're doing. So then the question is, what do you do with your investments with all these changes? How do you play it? We're going to have to play it cautiously with an eye on the exit because remember, this is a long-term thing that is happening. Like these companies have 3 years to comply. So you really just got to play it and watch it as it unfolds. And here's another thing that I forgot to mention. Every number that comes from a Chinese company, it's just BS. That's why part of this bill is auditing the company's financials because just like every other number that comes out of China, none of it is real. They just make it up. So that's just another reason those stocks should be delisted. There are very strict standards in the US when we're investing in all these stocks versus these ADRs from China. Now, if you look at a stock like Alibaba that we've been talking about here, it has been completely crushed. This chart looks horrible. You can see with all this stuff happening, it is just sliced through every moving average and every support. First, it started with this 50-day, which acted as a bit of support before it completely tanked. And then you see it consolidated for a bit, formed a new support right here, and then collapsed again through its 200-day moving average, which is an even stronger support, and now it's resting under there. And when you see something like this happen, so violently sliced through every support level, it's just a really bearish signal. So if anyone's holding this, you'd really be considering getting out. Honestly, if you had good risk control in place, you would get out even earlier. But the most likely thing that we'll see happen going forward is that this thing is going to wallow below this blue line, the 200-day moving average. So it'll either consolidate under here and go sideways, or it will continue to drop. We'll have to see what happens. And the reason we're focusing on technicals here is because these events and this news, it's all very long term. But price action is going to give you the first signal for how it's playing out in the actual stock that you're invested in. So you know the fundamental backdrop, and then price gives you the actual signal. That's how you put those two together. And that's what I mean by playing it as it unfolds. Let price lead you. So at the same time Alibaba got smacked, there's other stocks that took off in the same Chinese sector. So there are some short-term plays you could make before the news gets too bad and the tensions between the two countries rise too much. Now, I'm not a fan of investing in Chinese stocks, but at the same time, this is the game. And our Fallible investment strategy does not take into account whether a stock is Chinese or not. It's purely based off momentum. So in our TSI scanner right here, when it ranks all the stocks in the NASDAQ based off their momentum, and when it's spitting out this number, it's not filtering for what's Chinese and what's not, which is why right here, you could see that PDD, Pinduoduo, is number 2 on the list. It's right below Tesla. It has the second highest momentum in the NASDAQ, meaning that it has a very high probability of continuing to go up. So our model's algorithm constantly tracks the stocks in the NASDAQ and measures their momentum so that on December 1st right here, we got an alert that the model was buying PDD because of its high momentum reading. It was doing really well. So I got that email alert and I got in, and so did a bunch of our Fallible members. And now you can see we're up over 30% in a Chinese stock. And Pinduoduo is another e-commerce company in China. It's the top 3 competitor. You got Alibaba, you got Pinduoduo, and you got JD.com. So with all the bad stuff happening with Baba, Pinduoduo kind of took off because they're not in the crosshairs of the government just yet. And our system was tracking that whole thing just by measuring momentum. Because once again, it's nice to know the backstory and the fundamentals, but price is going to lead you. And that's why our system is purely based off momentum. And you can see with how high its momentum is, it's number 2 in the NASDAQ. Pinduoduo is likely to keep running. So it's a potential name you could add to your portfolio, but only if you have the good risk control around it. Remember, these are more short-term plays with the tensions that keep rising between these two countries. So our system has all the guardrails in place and the risk control to get us out when this stock does eventually turn around. Because as we explained in this whole video, it's not looking good for China and Chinese stocks. And that's why we're confident getting in and playing this upswing, because we know we can get out. We have a set plan. Our algorithm is going to tell us exactly when to sell. And we actually already sold some of our position on this upswing in these 2 days. We sold 25% of it, took profits off the table. And that right there is an example of risk control. We just locked in some gains. So if the thing turns around and we get out, we keep more of the money too, because we already sold some, and at the same time we sold some, we moved up our stop point. So as the stock moves, we keep adjusting our risk parameters. That's what risk control is. And you got to remember, in the stock market, you're always looking at the downside. That's your job. An investment manager isn't an investment manager. They're a risk manager first. That's your real job. So we expect to make some good money on Pinduoduo, but more than that, we know we're not going to lose on it because we know when to sell. So we're ready for it to keep running higher, and we'll take our profits and leave. And there's actually another really big stock that a lot of people are holding that the government is cracking down on. But this one is a US based stock, and it's one of the biggest ones, biggest companies in our economy, which is obviously why most people are holding the stock. But it might be time to look at the exits on that stock too. We talk about it in this video right here. So click on this video and check it out, because you're definitely going to want to adjust your portfolio once you know what's going on. So click this video and I'll explain it there.